We cannot tax our way out of this recession. Measure 66 will make Oregon the highest personal tax state in the country. Now, I like being first in a lot of things, but I don't want to be first as far as taxing people higher than any other state, with the exception of a tie with Hawaii. Now, Hawaii gets away with it, right? They got beaches and there's nobody around them. Oregon has a hard time when we do that, because one of the joke is at the Capitol, the fastest growing county in Oregon is Clark County, which is in Washington, right across the Columbia River. Because you can live in Washington, pay no income tax, and shop in Oregon and pay no sales tax. What a deal. We should vote no on Measure 66 because it's a mistake to raise the taxes to a level that sends a message to the world that Oregon is not interested if you have enough money to develop businesses and to pay high taxes. They already pay the majority of the taxes. Let's not increase that. And by the way, I'm not going to be affected by it. You know, I got a small law firm and I work in the legislature, right? But I don't want to just say it doesn't affect me, so let's put it on somebody else's shoulders. There's never enough money in the legislature, and so we need to draw the line somewhere, and we should draw it now. On Measure 67, it's a disguised sales tax, and we don't need it because it's a tax. Certainly, it's okay to raise the filing fee for corporations from $10 to $150. I mean, that's not a big deal for those of us that have corporations. But it's the tax on your sales that could go up to $100,000. That makes no sense. Because if you're starting a new business and the first 3 years, you're going to be pouring every dollar back into your business and you develop sales, you're going to be taxed, assuming that you're successful, you're going to get taxed on your sales, not on your revenue. You know, Alan DeBoer, Town and Country Chevrolet, congratulations, they're still in business. The good news from last year is they sold $14 million worth of cars. The bad news is they have to sell $15 million to make a profit. So they lost $250,000, that's their losses. And if this goes through, by the way, Alan, just write another check for $15,000. Okay, you and every other car dealer that's in your situation, or gas stations that sell a lot of gas but have a low margin, or grocery stores that sell a lot of food but have a low margin, when you raise these kinds of taxes, all you're doing is harming those entities which will help us get out of this recession. So a no vote on Measure 67 is also what I recommend. Consumers pay the taxes. Businesses don't ultimately pay the taxes, right? I mean, if you're a business, what do you think they do? Say, well, we'll just take it out of our pocket? No, you raise prices. You raise the cost of services and materials and everything else because you're in business to make money. And so to say that it's not going to affect me because it's only those big corporations, it affects every one of us who buys services or products. Because when the costs go up, so does our costs go up, right? Congratulations, the legislature passed a 6-cent per gallon gas tax. Okay, that went through. That didn't get referred to the people. I mean, or by referendum, we don't get a chance to vote on that. So does that have any effect on you? Well, it does every time you buy a gallon of gas. Was it good or not good? Well, it depends on whether, how you feel about it. But the point is, when you raise taxes on businesses, it's the consumers that end up paying it. The final point is one that I've tried to make, and that is that Oregon does not have a revenue problem. It's got a spending problem. We're in time of recession, and so we're going to have some difficulties like everyone does. The state needs to have those difficulties as well. Now, we've been a little bit confusing. You've heard a couple times we had a $2 billion cut. You heard that? And then it's a $4.7 billion increase. Well, how in the world do you have a $2 billion cut and a $4.7 billion increase in the same budget? Well, the answer is that when you start the budgeting process, you get figures. It says, okay, here's what we spent last time, and here's what we'd like to have this time to maintain the current service level, the essential benefits level, and other things that get added into it, which the governor has a lot of control over that. That becomes the essential budgeting level or current service level, the starting point. And so we're $4.7 billion over what we paid last time, but it's a couple of $1 billion less than what they would have liked to have had. And so that's not a cut, that's just less of an increase. When we have huge increases, there's a consequence. Somebody's got to pay for them. And now we're faced with $733 million. If it passes, we will go through and life will continue on, and we'll make we'll deal with it. There will be some businesses that'll move out. The economists that we read say that there will be wealthy people that'll move out, but that's life. You'll still go on. If they go down, there'll be $733 million that will not be funded from current sources. Maybe some of that money will come from reserve accounts. Some of it may come from making charges. Maybe we won't be able to hire 1,540 new employees. There will have to be decisions made. Those decisions need to be to affect least the least amount those people that depend on our services the most.